Happy Friday, everybody. It is March 22nd, 2024, the end of the longest week ever. Just teasing. Uh, but, anyways, it has been a long week. Just a lot going on in the world, and actually, a fair amount going on in the markets. So, we're going to go through the markets just like we usually do, the automated trading systems, and then the manual trading systems, and then the bullish percent indices, and this is our end of the week review. So I'm not going to do the weekly charts. I'm going to whatever. We'll see where we go with this. So I also have a new marker tool, so I'm going to try it. Let's dive in. So this is our Dow futures, and right now we're I'm going to say climbing higher, but we need to get past this high equity peak, and that'll be new high equity in our Dow futures piece of the account. Today's trades, the 22nd, we got net winners, so that's good. The Russell didn't trade today. This is the results from the last couple days. So no 322 trade. If you notice, the Russell doesn't trade as often. It just doesn't have as many humps and bumps, and that's just fine because it's just another, really, it's a diversification. It's just another system in our arsenal, really. And then here's the NASDAQ, and it actually traded down today, which is still all in the context of this market going, or I shouldn't say this market, this equity curve going higher. The results of our trading systems, ultimately, we want our equity curve going higher. But today's trades, and there were just two of them, one of them stopped out for a max loss, and we've had a couple of max losses here, which put a damper on things. But one of these days, we need to get some of these type of trades in a row and get that back and get ourselves back up here to this new high equity. I think it's sometimes really interesting to see like this action that happened here and this action that's happening right here and how similar they look. And you can actually see some just similar dips in the way that this thing goes. But like I say, at the end of the day, it's really the upward sloping equity is what you want. All right, manual trading systems. We use Thinkorswim, and I'm gonna just jump in here. So the I'm gonna look here. The S&P 500 went down 7.35 points, which is not very much, minus 0.14% after yesterday's rally. The Dow Industrials went down 305 points, which feels like a lot. It is 0.77%, but after yesterday's rally, it was a big day, or the last few days. We'll look at that actually here. And, I knew it was a pretty good possibility that when we got close to 40,000 at 39,889, that's the high, that this thing would not just go there, all at once, especially today being a Friday. So, yeah. So I still think 40,000's in the cards unless this thing just rolls over from here, but I just don't think it'll do it. Nothing's easy about the markets. They just don't make anything easy. The Russell today was down 26 points, or 1.27%. Let's look at IWM, the ETF, or exchange traded fund for the Russell. It's actually a decent area for a buy. So put in an alert for at or above that, and create at or below this, and that way I get that alert when after the market opens on Monday. I can take a look at it really anytime and go to my uh, market tool and go and see what the alerts were thrown, and I can sort those. So that's also an alert that I've got this thing set up for alerts on my phone, so I can just go search back through the alerts and look at those too. So I do want to point out, this is where I'm going to use this new tool. Alright, I've got these lines, this zigzag on here, purposefully to show market structure. And so we were here going to there, and that was a high after this previous high. These little yellow dots, with especially when they are on these zigzags, are noting the highs. So then we pulled back, and we came down roughly to the same level as there. Pretty close and I don't think we went under it. In fact, I know we didn't there. Then we pulled back up again. This is just this one particular instrument, and this is the hourly chart on the right hand side. And then we came down. So as far as market structure goes, this area, that when that broke high and made polarity being higher highs and higher lows at that point, I'd have to turn this tool off and look back further on the left chart to see where it came from. But actually over here you can kind of see that it was going higher, because that all happened inside this zone. And then it pulled back, which is what this pullback here is. And we went into lower highs and lower lows. And when this put in a lower or a higher low right there from the previous pullbacks, that's just literally over here. You can, I mean, this thing cleans up, the zigzag cleans up a lot, but we really had an up, a down, another up, a down, and an up, a down, and an up. So when this point right here was a new higher low put in here, and then this thing turned around, and I mean, it did this zigzag back and forth, but this automatic tool, the zigzag on our chart, shows it actually came all the way up through, and that took out all of these, that level, and in a nice clean way. I'm going to turn this back off real quick. In a nice clean way, this thing showed down, up, down, and then a break higher, and a kind of W. And when that broke higher there, that showed a real change in polarity and a break of structure. And that's not the cleanest break of structure. That's also a break of structure, because it broke the old pivot highs. And then the real key here is that we spent, in this area up here, we spent time and price above. So it wasn't a fake out to the upside. It spent time up here before it came down. And then, so you can, this is why I say this is a good spot to get in, or to think about getting in. Now I could watch for the stochastics, and I could watch for the RSI Laguerre to turn back up again. Or we could just wait for this to come down into this zone where I've shown before these these dotted lines, price goes one side of the dotted line, back to the middle, up through the other to the dotted lines, back to the dotted lines again, back up to the middle. Hopefully you follow that. But now that we're here, we should have a good low in place, and it shows up over here as well. And that low shouldn't get taken out unless the total polarity reverses. And that's why this is a tradable area, because if this thing comes down into this area or even a little bit below and you buy it at a great price, this is, I'm going to clean this up again, then you're risking whatever the distance is from here to your stop. You can risk this much, or if you wait for the price to come down, you may not get filled, but you could risk this much. And then if this thing bounces from there and puts in a new higher low and goes up and continues this pattern like that, and you break structure here, because here's another good example of a place where it, clear mark, this broke structure here. Now it didn't spend a lot of time and price above there, which is part of the reason why it pulled back, but it did break structure, and it did have a bar or two in there that actually closed above this level. It's just not as convincing as, like, this is a giant move, and it was fast. It was a fast move, and it spent some pretty significant bars in that area. So this is all a little bit of subjectiveness, but my point is, if this pulls down, pulls up, and then zigzags and breaks this again, then that's totally in character with this bigger move. So that is the basis of how these things work, and this is a good looking one over here on the right hand side. That's why I wanted to call it out. And we could do this all day long. I'm going to turn off this tool. And come back to this chart, but and I'll point out some more, but I won't spend a ton of time on it. But going forward, I think I will. So that is the IWM. That's a tradable thing, and then we'll go on to. So we looked at the S&P. We looked at the Dow. This is the Russell. That's what we looked at there. The long-term, or the 30-period moving averages have all been green here too, by the way. The NASDAQ actually went up 26.9 points today, and the 30-period moving average is green. You can actually see this, when this thing broke up above this level, it actually did it on a gap higher at the open, pulled back hard, because that means a bunch of people probably jumped in and started to try to chase it, and then the market took them down, because that's what it does. And to get them to stop out, and then it decides to move a little bit higher. And now the question is this thing going to roll over from here before it goes higher, or is it just going to tear off to the upside? And any one of those is possible. We are at the upper zone here in the 2ATR tool. We could come back to the middle. We could come all the way back, and none of that would break polarity. All right, the transports today are actually higher by just a little bit. Came up higher and then put in a relatively bearish looking candle. Like it could pull back some. IYT is the exchange traded fund, the more tradable instrument. Which looks like it could be in for some either sideways or sideways to down action at this point. Because this looks like a head fake area because the price came right up here, put in a big bearish candle, put in another bearish candle, and now we're probably working our way back to some kind of a balance, mean regression type of thing before this thing goes and does something else. So we'll see what that does, but you can see clearly where when it came up and hit this old high, it just sold right off. TLT is bonds. That's an actual buy signal today. I'm not wholly convinced that it's the buy signal to really get into yet. I did buy a partial position. And just to be clear, I want to look at the weekly. That is a buy signal also on the weekly chart. And the weekly 30 period moving average is up. So that's part of the reason why I wanted to get into that position for a partial. I may kick myself for not getting a full position because it could just start running, but actually if it just runs a little bit, I could finish off the position with some confirmation signals from my lower studies. Alright, oil today looks like it didn't do much. The USO went down 0.18%, but we're still climbing, it looks like, overall. Here's a nice, going to call it out again. Price was doing whatever it was doing, came down, put in a lower low off of whatever this was. I don't know what it really was coming into that without really tracking it. It looks like it was this move here. But then we clearly took off and broke these highs. And now we're coming back. So a move coming back eventually and then going higher from there and taking out my target would be a pretty decent forecast. Again, I'm not in this anymore, but if that actually gives me a chance, I would get in if I get a new buy signal, because I think this thing could have legs actually to get all the way up to 81.93 or almost 84. And then the next high level from there is 92. So that if this thing would get up and going and taking out those highs, that's probably not going to be good for whatever's happening in the world, but it would be good as a trade. All right, I'm going to wrap that up. Let's look at gold real quick, GLD. Gold's on a pullback after a big move. That's normal. Doesn't mean we can't get another buy signal on gold as well. The longer look on gold, well, that's a new high. So we're up and above these old highs. So old resistance becomes new support. At some point, I'd expect that to pull back to this level, and that would possibly be a place to get bought back in. And then we'd watch it for it not to take out these lows. Not surprising that BITO is doing similar things. It looks an awful lot like the same thing as the gold chart. Pulling back to a midline, or even back to where it came from would be an expected move. All right, and then let's go wrap it up. Wait a minute, I've got these over here too. So the VIX actually was lower today, and then it's got a little bit of a bullish candle. So there was a lot of stocks or indexes and sectors that were actually down today. So the Friday moves kind of played out again. It was just it's Fridays are typically they're down days in the way that we trade, and because we don't trade. I can't say just don't trade on a Friday. I mean, you cannot initiate on a Friday if you don't want, but our systems aren't built that way. They're built to kind of buy and hold for a while. And the McClellan oscillators, I really don't think there's much change in what we drew here the other day. Um, they both did rise above 60 and then turn down again, but you can see they get up here to well above 200 at different points when they really get going. And I actually think that might be in the cards because of the Dow and where it wants to go to 40,000. That psychological level at 40,000 I think is just going to be too strong not for it to get there in the near future. And then we also looked at this the other day, and I was expecting if we actually gapped lower, we'd take out and start possibly going higher, but it did exactly the opposite. And we got into, let's look at all of them here for context. We got into some minus 1,000 tick trades. So you can see we've been in the majority of this in the middle range here between 600 and minus 600, and you can see we got out of that range to 1,000 ticks. So that's showing some bearishness kicking in. And if we get some extreme bearishness, like we had extreme bullishness over here, I mean, that's the kind of thing that can get us to start going lower. If we start getting some extreme bearishness, you can start expecting a counter move from that, because the markets are typically counterintuitive. So in time, if we watch this thing together, I'll show you some context and you can start getting an idea. Again, it's really a little bit of it's like, well, where are we going, and are we into a bullish day or a bearish day? And when this thing gaps down like this and starts, like, what is that? That's 10 o'clock in the morning. If you saw that, you knew you were in for probably at least a partial day getting down into something like this. Now, it could have rallied by the end of the day, but it did not. So if we watch this like at the end of the day, Monday, going into Tuesday, we might get a reversal, because Tuesday is normally turnaround Tuesday. And finally, the bullish percent indexes. The industrials didn't move today. The NYA went up 0.44%. The transports tacked on 2 new X's to the upside. That's pretty interesting. So, but then they didn't move at the end of the day. They got 0% for movement there. So that means they moved all the way up and then pulled all the way back, which shows you still the indication that there's bullishness under the hood. The NASDAQ up 0.29%. The S&P 500 minus 0.27%. The S&P 100 up 1.35%. And the NASDAQ 100 minus 1.69%. So really, they're still kind of mixed, and I think that's actually relatively bullish based on the fact that we came from bullishness. If they were relatively mixed and we were bearish, I would be saying that the exact opposite. So, and right now there's the fact that they're mixed is creating, there's plenty of bullishness and some bearishness under the hood. So that is hopefully that helps give you some context for what's going on in the markets. And again, I've got my eye on Dow 40,000, but it's not really driving me either. I'm just driving off of those uh, market structures, the way that I'm explaining them here, and that's how we do it. So until next time, have a great weekend, guys, and take care.